Joining us now is TD Cowen President Jeff Solomon. What do you mean? What are you worried about here on liquidity front? And good morning.
Yeah, good morning to you. It's good to see everybody. Listen, I think the market's had an incredible rally, but that's because we had this in, two major issues with the budget crisis and the regional bank crisis. And so anytime you have anything exogenous that happens to the downside, you're gonna see a rally. I just think when you look at some of the challenges in terms of where liquidity is in the marketplace, certainly in credit, we're not quite seeing the flow of liquidity. And I think last time I was here, I talked a little bit about the fact that there would be a dampening of lending and things like that in the marketplace. Even though credit spreads have tightened and high yield spreads have tightened, I still would like to see capital start to flow a little bit more. I'd like to see deals start to get done before you can declare that, we're sort of beyond the last crisis.
Well, all of that's supposed to happen with the Fed raising rates. I think the thing is, Jeff, it hasn't been as bad as it could have been with a more than 500 basis point tightening in Fed policy in about a year and a half.
Yeah, we were long overdue for that. So I think, we're still going through an adjustment period here. And I applaud the Fed with the speed at which they've done it. And I would have expected there possibly to be more disruption than maybe it even was. Like the regional bank crisis was a disruption, but it wasn't nearly as bad as I think it could have been when you're talking about that. We still need to see how things are going to play out in the real estate market. That's sort of a slow rolling issue that's going to play out over the next few years. And I think the next really meaningful inflection point that the market has to look at is what's going to happen with the budget negotiations in the fall. And that's really, that's why I kind of think, the markets have done incredible. Anytime, 11-day win streak, we're back to near all-time highs. You need to be a little bit more skeptical that we're completely out of the woods. But I will just say it feels today unlike the last time I was here ahead of the budget deal or the debt ceiling deal. It feels a lot better. IPOs are starting to happen again, and we're seeing follow-on offerings happening, and people are using this window as a chance to access capital.
So in the meantime, obviously, we're expecting a rate hike tomorrow. What's your view on the rest of the year? You say the next big inflection point are the budget discussions, but we are starting to see the consumer stretched a bit. We are seeing that cost of capital rise. Is one more hike, is that in danger of maybe creating some wobbliness in the rally that we're seeing so far, even before then?
No, I think the market's pretty well got its head around this idea that the Fed is going to do whatever it can to knock inflation out, right? Eradicate it if you can. And there's something like a great inflation scare to remind people how bad that can be. And so the market's got its head around the fact there's definitely one, maybe two. But the Fed will also take a look, even though it's independent, arguably, it'll take a look at what happens with fiscal policy. And this is something I think that in the Bernanke years we saw a lot. And then when Janet Yellen was in the seat, we saw a lot. Like the Fed waiting to see how fiscal policy was going to play out as potential stimulus or contraction.
Domestically or globally? Because obviously we have the ECB, we have the Bank of Japan as well.
Yeah, no, I think the Fed focuses primarily on where we are in the U.S. economy. So it'll take a look at, if there's going to be a protracted budget debate and a government shutdown, what will that mean, and what can the Fed be doing to ensure that there's more stability in the markets during that period of time? I mean, this is something, again, you rip it right out of the playbook that we saw from Bernanke and predecessors.
No, they'll never.